Dirty dealings, corporate battles, consumer woes. This is Evening 5. Discussions on gas distribution in Sarawak between Petronas and Petroleum Sarawak or Petros have been settled, and the government is currently fine-tuning the details, parameters and implications of the move. In announcing this, Prime Minister Datuk Sri Anwar Ibrahim said he had a good discussion with Sarawak Premier Tan Sri Abang Johari Tun Openg regarding this matter, and a clear decision was reached. He told this to reporters after launching the National Artificial Intelligence Office at the Malaysia International Trade and Exhibition Centre. On Wednesday, Abang Johari said that it was up to the PM to announce the details of the distribution formula. In an interview with local television station TV Sarawak on Tuesday, Abang Johari was reported as saying that the gas distribution issue could be considered resolved while waiting for the official announcement by Anwar. According to him, the issue of gas distribution only involved the legal aspect, where the Petroleum Development Act 1974, referenced by Petronas, and the Oil Mining Ordinance 1958, enforced by Sarawak, could exist. Gamuda reported that its net profit climbed 5.3% in August-October quarter as revenue jumped on improved contributions from all segments. It also achieved a record high order book of 30 billion ringgit. Net profit for the first quarter of FY 2025 rose to 205.4 million from 195 million previously, while revenue rose 48% year-on-year to 4.14 billion ringgit. The group declared a first interim dividend of 5 cents per share post 1-for-1 bonus issue. The group saw earnings improvements in its construction business, both domestic and overseas, as well as its domestic property development operations. But these numbers were partly offset by a drop in earnings at its overseas property development business, with segmental profit more than halving. Gamuda said its performance in the coming quarters would largely be driven by construction activities, while unbilled property sales stood at 6.9 billion ringgit. The group secured 6.7 billion worth of construction contracts in the first quarter, comprising the 3.2 billion ZZ Donghu Mass Rapid Transit Construction Turnkey Project, the 2.3 billion Ulu Padas Hydroelectric Project, the 700 million Boulder Creek Wind Farm, and the 500 million Cyberjaya Data Centre. Axiata Group's earnings quality will weaken if its merger in Indonesia goes through, as the state-owned telecommunication company will be more reliant on higher risk markets. The merger between its 66.5% owned PT XL Axiata and Smartfren Telecom would result in Axiata's stake in the combined entity falling to under 35%, leading to more earnings volatility, with dividends being discretionary that will fluctuate with cash flow needs, the ratings agency flagged in a note. With the loss of direct control over XL Axiata, a higher proportion of Axiata's consolidated cash flow will be from higher risk markets that worsen earnings volatility, S&P said. S&P nevertheless maintained its long-term credit rating on Axiata of BBB with a stable outlook, citing Malaysian government support, given sovereign wealth fund Khazanah Nasional's direct 36.7% stake. Further, the ratings agency also expects Axiata to use most of the merger's proceeds to cut debt as a proportion of operating profit to 3.1 times in 2024, 2.7 times in 2025, and 2.9 times in 2026. Supporting the improvement, according to S&P, is moderate earnings growth, slower debt-funded expansion of the company's tower arm, and its expectations of gradual strengthening in the ringgit versus the US dollar. Hurt by foreign exchange losses of 231.1 million, Sapura Energy fell into a net loss for 286.1 million in its third quarter of FY 2025 from a net profit of 31.8 million previously. Earnings were also hit by higher finance costs, which rose 20% year-on-year, as well as lower share of profit from Sapura OMV due to reclassification from investment to asset held for sale since the first quarter of FY 2025, according to its boss filing. The company completed the divestment of its 50% stake in Sapura OMV to Total Energies Holdings on December 9th. Commenting on the Forex losses, Interim Chairman Shaheen Farouk Jamal Ahmad said that this underscores the critical importance of restructuring its debt portfolio to mitigate these risks. Sapura Energy says that it had applied to Bursa Malaysia Securities for a further 6 months extension to submit its regularization plan. For the third quarter, revenue grew 4.4% year-on-year to 1.15 billion, driven driven by its operations and maintenance and engineering and construction divisions. The group's order book currently stands at 6 billion ringgit, while its joint ventures hold an additional 5.8 billion ringgit. Sapura Energy said its E&C and O&M segments are actively pursuing several prospects, focusing on transportation and installation, subsea inspection and repair and maintenance and decommissioning, while aligning its ESG principles across all operations. EcoWorld Development Group saw net profit for its fourth quarter surge more than 25-fold to 83.4 million thanks to strong growth in net earnings from the group's Malaysia operations and lower impairment in the carrying values of its investment in EcoWorld International. Revenue, in contrast, dropped 24% year-on-year to 638.5 million, where revenue in the previous corresponding quarter was then boosted by the sale of a 92-acre parcel of industrial land in Eco Business Park 2. The group declared a dividend of 2 cents per share. This brings EcoWorld's total dividend payout for FY 2024 to 6 cents per share, matching the amount paid in FY 2023. EcoWorld's net profit for FY 2024 rose 60.3% to 303.5 million, up from 189.3 million in the previous year, as revenue gained 1.4% to 2.26 billion ringgit. In a separate statement, the group notes that its Malaysian operations contributed a PAT of 343.1 million for FY 2024, a record high for EcoWorld Malaysia, mainly due to improvement in gross profit margins of its subsidiaries. The industrial segment, encompassing Eco Business Parks and Quantum, achieved 1.11 billion in total sales, a 6% increase from the previous record. President and CEO Datuk Chan Kim Wah said that thanks to EcoWorld's strong balance sheet, the developer is well positioned to expand its land bank to broaden and deepen its market share and increase future pipelines of growth.